Hello everyone and welcome back to the Cardonomics YouTube channel, where we take a look at trading cards through an economic lens to better understand these markets. And today I'm going to ask the question, are trading cards worth investing in? Or better yet, do they protect our purchasing power in the future if we invest in these collectibles? I'm going to use Evolving Skies as an example. If you bought one of those boxes back on release in August 2021, or if we bought Bitcoin stocks or even gold with the same amount of money back then, what comes out on top? Or was it better just putting that money in the bank account or doing nothing at all? We're going to go over all that today. And I just want to go through what money is in the financial system we use so we can better understand that first. So without further ado, let's get into it. So before we get into the video, I have to read out this little disclaimer. The information provided in this video is for educational and informational purposes only. It does not constitute financial, investment, or legal advice. The content is based on publicly available information and personal opinions and should not be considered as a recommendation to buy or sell any financial asset or collectible. Past performance is not indicative of future results. Investing in financial markets and collectibles involves risk, and you should do your own research or consult a licensed financial advisor before making any investment decisions. The creator of this video is not a licensed financial advisor and assumes no responsibility or liability for any actions taken based on the information presented. So now that is out the way, let's get into what is fiat currency. So fiat currency is a currency whose value is not backed by a physical commodity like gold or silver, but rather by a government legal tender designation. So in essence, it's a type of money whose value is derived from the public's faith in its issuer and the government's legal decree that it can be used as a medium of exchange. So I brought this up because we all get paid in fiat currency, which is Australian dollars in the case of Australians. So just wanted you all to better understand what that is. So I'll keep going now. No intrinsic value. So unlike commodity currencies like gold or silver, fiat currencies don't have inherent value based on their physical composition. So it is legal tender, so the value of a fiat currency is established by a government's declaration that it can be used to pay debts. So I want you to remember that word debts because it's going to come up again very soon. And it is a trust-based system, so the value of a fiat currency is largely dependent on public trust and confidence in the government that issues it. So very important there. So just an example, the Australian dollar is what we're going to be using as an example today, as I'm from Australia. The British pound, the US dollar, they're all examples of fiat currencies. Just want to quickly go over the banking system. So in Australia, we went off the fractional reserve system back in 1988. So now basically Australian banks must maintain a minimum capital adequacy ratio, so CAR, to ensure they can absorb potential losses and maintain financial stability. So this is regulated by the Australian Prudential Regulation Authority, which is APRA, and banks must hold a certain amount of capital expressed as a percentage of their risk-weighted assets to meet these requirements. So basically back in the day, banks have to have a percentage of deposits in the bank in order to lend out money. That was all changed in Australia in 1988, and this is a system brought in now. And coincidentally, America are now on this system or something similar since March 2020. So again, we'll just go over it quickly. So risk-weighted assets. Banks classify their assets based on risk, and the capital requirement is calculated as a percentage of these risk-weighted assets. So the minimum capital requirements are quite low, as you can see here. So common Tier 1 equities are only 4.5%, Tier 1 capital 6%, and total capital 8%. So basically, since getting rid of the fractional reserve system, banks can lend out as much money as they want, as long as they have some sort of capitals in reserve in case of something going wrong. So basically, liquid assets on their balance sheet, they are able to turn into some sort of money to be able to get out of trouble. So just something really good to know there, because our whole system is based on debt, or the fiat currency system is based on debt, and banks literally have the ability to just keep printing money. So this is what goes on to the next one, which is what is inflation. So inflation is a sustained increase in the general price level of goods and services in an economy over a period of time. This means that prices are generally rising and the purchasing power of money is decreasing. So general price increase, inflation doesn't refer to a single price increase for one specific item, but rather a widespread rise in the cost of various goods and services. So sustained increase important again. Inflation is a gradual and ongoing process, not just a temporary price spike. And it results in reduced purchasing power, which is what I want to emphasize today. As prices rise, the same amount of money can buy fewer goods and services, meaning your money is worth less over time. And this is why we invest, and this is why we put that fiat money that we earn into other investment vehicles, because we don't want to lose that purchasing power. So that's the whole point of today's video. And we've got our $200 here, so 200 AUD. We're going to use August 27th, which was the release date of this particular box, Evolving Skies, and June 11th, which is when this video was recorded, so around 3.8 years, almost 4 years. So we're going to look at Evolving Skies, again around $200 at the time the purchase this booster box. We're going to look at if we put that same $200 into a savings account. We're going to look at if we just left that $200 in cash over time. We're going to look at Microsoft stock. I picked Microsoft because it is the largest market cap stock that you can buy on the S&P 500. We've got gold, which has always been known as a medium of exchange or a store of value. So we're going to put that $200 into gold on August and see how that went. And also Bitcoin, which is the largest market cap cryptocurrency in the world. So we're going to see if you put $200 in Bitcoin back then, how much we would have today. So let's go over cash first. So this is just to show you all, what inflation does to our purchasing power. So if we hold cash, $200 is $200. So the total return is zero. But if we adjust that with inflation over the time period we're talking about, we've actually lost 35%. So in simple terms, the Australian cumulative inflation over that period of time is minus 35%, which means what cost $200 in August 2021 now would cost about $270 today. So that's important to know. So next we're going to see if we put that same $200 in a savings account. And I've used an average of 3.5% annually as just an average of a return if we put it in the bank. So calculation over approximately 3.8 years. And we get a return of $229, which is around 14.5%. But, you might think, all right, I've made 14.5%, but when you do it inflation adjusted return, well, you've actually lost 20.5% because we're minus 35% on our purchasing power, which is what I want to emphasize today and help people understand that even though we're increasing our wealth, in terms of the numeric value, that we're actually losing purchasing power on that money if we did these two last things that I just mentioned. Hence, this is why we invest our money, in the hopes that we can preserve or obtain more purchasing power in the future. So next, we look at Microsoft stock. So the stock market is a very well-known investment vehicle. And if we bought Microsoft stock back in August with our $200 AUD, so the price back then was around 300 USD a share, and exchange rate back then would bring us to 408 AUD, giving us 0.49 of a share with our $200. So if we kept that today and were to sell that today, the current price of Microsoft is 470 USD, and the exchange rate has now worsened for the AUD. So that brings the stock value in Australian dollars to 705 AUD today. So those stocks that we bought back in August 2021 are now worth 345 AUD. So that's a return of about 72.5%, which isn't bad. And yes, we did beat inflation. So once you minus the inflation and adjust it for, the inflation we lost on our purchasing power in Australia, gives us a return of 37.5%, which isn't too bad. At least we're not losing money here. So Microsoft wasn't a bad option back in August 2021 to park our money. Now let's look at gold. So the initial price of gold back in August was $2,918 AUD. And we purchased $200 worth of gold at the time, giving us 0.0685 ounces of gold. And now we fast forward today, and the price per ounce of gold is 5,200 AUD. So it's significantly increased. And that makes our $200 worth $356 AUD today, giving us a total return of 78%. So once we adjust that for inflation today, that gives us a return of 43%. So again, if we bought gold back then, we are in front of inflation by around 10% a year, which is not a bad increase. Moving on to Bitcoin. So if we bought Bitcoin back in August 2021, it was around 63,211 AUD at the time. So our $200 would have purchased around 0.003164 of a Bitcoin. Fast forward today, and Bitcoin is worth 170,000 AUD approximately. So our $200 is now worth $538 AUD, giving us a return of 169%. So again, way ahead of inflation adjusted percentage at 134%. So again, if we put our hard-earned money back then in Bitcoin, we'll be way ahead and we'll be able to purchase a lot more with that money today. So moving on to the Evolving Skies booster box, and this might surprise a few people, but yeah, Evolving Skies booster box initially was around $200 on release. You could find them even cheaper back then, but I'm going to use the $200 mark as a round number for the purpose of this video. And again, back then it was readily available. You could buy Evolving Skies boxes, in stores and on the secondary market for a good price. So there was no scalping back then. There was no one pointing the finger calling scalpers. Everyone could just buy whatever they wanted at reasonable prices. Anyway, let's look at the numbers of this. So if we put our $200 Evolving Skies booster box, the current market value now today is $2,800. So it's a huge increase of 1,300%. And even if we take off our inflation adjusted figure, we're still in front by 1,265%, which is a huge increase if you invested in Evolving Skies back then. So again, to answer everyone's question who says that, trading cards isn't an investment, well, these figures say otherwise. So if you have any friends out there that say that to you, we'll just share this video to them and they can look at the numbers for themselves. So just looking at everything together now. So we have, cash right at the bottom. $200 is now still $200, but you've lost 35% of your purchasing power. If you put it in the bank in an interest-bearing account, well, we're actually down 20.5%. So we've lost purchasing power on that money. Microsoft coming in at third last there. A nice increase of 25% of our purchasing power, which isn't bad. Then we go on to gold, and gold's netted us 43% purchasing power if you invested back then. Bitcoin in second place at an increase of 135%, and way ahead, Evolving Skies booster box at 1,265%. And again, we're using Evolving Skies for the purpose of this video, but you're going to have very different results depending on the booster box that you invested in back then or at whatever time frame we use. But it's just something good to look at, actual figures, and to see, whether it's a good idea or not. And the data shows here that it was an amazing opportunity back then, and those who hold, for this period of time are very, very happy with the result. So just a conclusion here, again, some things to go over. Cash and low yield savings accounts typically lose purchasing power over time due to inflation outpacing returns. Secondly, inflation erodes fiat currency's value. Investments that outperform inflation are critical to maintaining or enhancing purchasing power. Again, good to know. Diversifying assets strategically helps hedge against economic uncertainties and maintains real wealth growth. So that is what I wanted to point out today. I appreciate you tuning in, and make sure you share this around so we can get this information out to as many people as possible, because I think it's important to understand a lot of this stuff that I went over, and a lot of people don't. We don't learn this in school. If you don't do the research yourself, you will never know. So I hope this video has helped a few of you out there, and I hope to see you all next time. Bye for now.